Welcome to Maxim's Inside Track. We've got something different for you today. We've got Michael Harvey from Rabobank joining us just to share his insights and views on the current dairy situation and outlook. And thanks very much, Michael, for joining us. 7th consecutive fall on the GDT, so yeah, a little bit of a pessimistic result, but especially with 19.5, 20 thousand tonne taken off over the next 4 months.
And that's probably a good starting point. I mean, if you zoom out a little bit, I mean, Rabobank and our view on the market's been a little bit bearish for a little while now. And when you look at the supply and demand fundamentals, I mean, they're clearly supporting prices at current levels. But when you're sort of taking a forward view, we've been of the view generally that there is going to be a bit of a shift in the market balance, and that will lead to a bit of a price correction. Which, if you're looking at the GDT, I mean, clearly it's a clear trend downwards. Like you mentioned, 7 in a row. Ahead of the peak curve in New Zealand, so it does send a bit of a warning signal around the future direction. But our fundamental view is you've still got an environment where there's still some risk around what the demand piece looks like over the next 12 months. There's some positives in the sense that vaccines are being rolled out in some countries, some economies that are big dairy consuming economies that are opening up. But you look outside of the US and the UK, and you look at the Delta variant running rampant in Southeast Asia. You've got countries that are extending lockdowns, going back into lockdown, so there's still a mixed picture in the demand sense. Now, all that simply means is there is mobility restrictions for consumers. In some, and we learned that in the last 12 months. Consumption can still be quite buoyant because there's just that normal channel shift. But what we do caution is that you've got an environment where government support is winding back from a very big base, but government support isn't as strong as what it was 12 months ago. There is consumer price inflation, so you do look at that those marginal demand markets where you've got those settings where there is potential for weaker demand in the next 12 months, not stronger demand, and that's a key piece to why we've been bearish on the outlook. When you overlay that with a supply picture, which is it's been quite a modest supply profile through clearly the European peak was quite modest, but when you do look at the global production piece, profitability is quite strong for most producers around the world. We are seeing supply growth in nearly every export region, even though it's modest. And now you're starting to get some signals where production's actually growing a little bit stronger. So you're seeing in the US, the Kiwis have had a strong finish to this season, and all the settings are there for a good spring peak. It could still be disrupted by weather, but everything's in line for supply to be picking up a little bit of pace at a time when demand's a little bit mixed.
Yeah, and they're those solid opening milk prices in Australia and New Zealand should incentivise good starts to the season, I suppose, as you say, weather dependent, but yeah,
really strong price signals. I mean, these are prices that are well above break even for producers in both countries, and probably slightly above our expectations where they might come, but that's beside the point. I mean, it's a positive price signal for producers, and there's weather risks, and there's feed costs pressures in some production systems around the world, less so in New Zealand, but certainly that's a risk for farmer margins. But it's still a profitable milk price environment for a lot of producers around the world, and particularly here in Australia and New Zealand. And it should lend itself to a little bit of supply growth, but there's more that goes into the mix around. We've seen some protesting in New Zealand this week across the agricultural sector because there's those environmental pressures that are feeding through. There's been a lot of discussion in Australia around why we haven't seen stronger supply, given we're talking about a third year in a row of really good profitability, and a lot of that hangs on we're still recovering from a pretty severe drought where we've seen consolidation, we've seen farm exiting into out of dairy into beef in some instances. But some of the things that we look at Rabobank, we're certainly seeing confidence levels have picked up dramatically, investment intentions have picked up dramatically amongst our dairy clients. So there is some things in the pipeline which should lend itself to a little bit of supply growth.
Oh, that's good. That's good. And that GDT platform off slightly, 2.9%. I think the sixth consecutive fall. However, whole milk and skim still at sort of 5-year highs still. So we're still at pretty solid numbers, but we're just sort of pegging back slightly from those extreme highs, I suppose.
That's right. I mean, one of the things you would have noticed in the market is, the premiums that Oceania exporters have been getting have been quite strong across the dairy complex, and that's starting to narrow, not surprisingly, given how high they were and the fact we're heading into that peak production period for this part of the world. One of the things we're still looking at, that, and you would recognise that, China demand has been doing a lot of the heavy lifting in the global market.
Yes.
At these sort of elevated prices. So, there's a fundamental view around, well, what does demand look like in China in the coming 12 months? We're of the view that we would start to see some, softness in their import volumes. And again, that feeds into our, the view that we had around a price correction coming in the next 12 months. Because we do simply think that, prices at those elevated levels that they were at was going to be too high for a lot of those buyers outside of China. And that'll be a key dynamic that we're watching. But yeah, clearly still prices are still quite elevated, and that's why we've got the milk pricing environments we've got across, the farm gate sector around the world, but, starting to come off a little bit now.
Yeah. And mate, what opening up of some of those, I know that's going to be a bit of a rocky road, but sort of food service opening up, and I see that retail demand is still quite strong for dairy products in the US. So, it's a bit of a balancing act through that demand dynamic.
Yeah. Oh, look, I mean, the channel distortion was extreme when you rewound 12 months ago, and if you looked at the recovery of food service and the return to normal of food retail, they've certainly been on a path towards a new normal in a lot of markets. So we've spent a lot of time looking at that trend in Australia, but also China and the US. And there's certain markets like the US where we are closer to pre-COVID than we were in other markets around the world, in the sense that the food service channel is back to growth, and the food retail, while still elevated, is returning to normal. But the trend that you've seen around the world is it's not a linear recovery. There's still risks of channel distortion given government restrictions around consumer mobility, and there's still going to be a lot of economies and a lot of markets where in 6 months' time, we're still not going to be back to pre-COVID levels because of what's going on with the Delta variant and things like that. So yeah, we spent a lot of time trying to watch that channel distortion and the return to normal. And there are some markets where it is, but there's certainly a lot where it isn't. And that's what the Delta variant. Not that I'm an expert on these matters, but it is it's in 100 and something countries now. Clearly there's lots of governments that are still dealing with third and fourth waves that are really quite severe, which is why you've got restrictions and lockdowns still a part of the landscape. 13
million lockdown in Aussie at the moment, which is a concern, but we'll work through that.
I'm one of those, Dustin. I think I read an article this morning that we're celebrating 6 months of lockdown in Melbourne, so that's fantastic.
Yeah, it certainly is under pressure down there, isn't it? That you guys are doing well to remain optimistic, but very challenging. Yeah. Mate, any comment around the currencies, weakness of the Aussie at the moment against the US and the Euro, which should alleviate some of these drops in prices a little bit?
Yeah, and look, I mean, that's where there has been a bit of a shift in the view from the bank. Our guys that, our FX strategies guys that will look at the currency and have a view on it, we're certainly suggesting that, a couple of months ago, it was more likely the Aussie dollar would be trading closer to 80 cents. But that view has shifted, and it's more mid 70 cents these days. So that's certainly some welcome news for dairy exporters, given we've got softening commodity prices in US dollar terms. Yeah, but currency is just as difficult to forecast as dairy commodity prices, as you would know.
No, mate, I totally understand. Mate, I'll just have a quick chat about skim milk powder. Starting to see some volume build in India. Do you that Mexican demand out of the US may sort of prop that up a little bit. We know that logistics and shipping out of the US is extremely challenging. Europe had a reasonable season in terms of milk flows. How do you see skim at the moment?
Yeah, well, the milk powders are the ones that are a little bit softer overnight, weren't they, on the GDT? And
Yep.
I mean, that's surprising. I mean, it comes back to that story around Oceania premiums in the market and starting to face a little bit of pressure.
Yeah.
Also, just naturally some pressure just coming because of the supply and demand fundamentals. And I was reading an article this week, not that it's going to have a huge impact on the market balance, but the Indian government are going to be subsidising some exports into the market. But your point around logistics is one where, I mean, clearly that's something that's, we've had to adjust our view and our assumptions around that. I think originally we were sort of, working on the assumption that some of those logistical challenges would be starting to clear by now. That's clearly not the case, and we're not as close to the market as guys trading product would be. But the experts seem to be suggesting that's going to be a challenge, right into 2022, which is problematic for buyers and sellers.
Yeah, and we felt as though that was definitely an inventory build, with some of those larger infant manufacturers, etc., where they couldn't afford to be out of ingredients to produce. So they may have gone from 2-4 weeks of holdings out to 2, 3, 4 months worth of holdings. So that pressure on the logistics piece as well, and demand and etc. So. Yeah, all very interesting dynamic at the moment. The butter fats seem to have held up all right. AMF looking like a premium to butter at the moment. We've still seen pretty good demand in Australia. That retail demand is still solid. Food service patchy in Australia, but some weakness in the European prices and cream prices over there.
Well, just on, the cheese one's interesting, and that's why you're paying particular close attention to the lockdowns, because that's one product category that gets hit hardest, because if consumers are in lockdown and the food service channel takes a bit of a hit. So there's positives out there that the US is coming out of lockdown in across the country. The UK is obviously celebrating Freedom Day, so that these are big cheese markets around the world, but there's still that risk that you go back into lockdown, you see further erosion in demand in the food service channel. So it's certainly something we're watching quite closely.
But just on that whey side of it, it feels like that China demand has waned a little bit. We're starting to see sweet whey prices soften a bit, and then conversely to that, we've seen the higher proteins, the 80s and the WPIs, be extremely firm and as high and as firm as I've ever seen them. But I suppose that's still a key China piece, that demand for sweet whey out of the US in particular.
Yeah, you put aside a global pandemic. The African swine fever issue was a significant issue for protein markets globally, and still it's still playing a big role in driving a lot of these things. So you've obviously had that strong demand from China for whey for animal feed and things like that. So that's certainly comes back to a point you made earlier around there was clearly, with the shipping disruptions, there was a need for buyers to have inventory cover given the delays. When you're looking at moving on just from the whey for animal feed, but if you're looking at a market where retail demand is really strong and you're a food manufacturer, you want to make sure you got the ingredients to produce the product so you can win some market share. So that that whole story around inventory levels and the need to carry safety stock has been an important one, and we're of the view more broadly in China that we do think inventories it's not an inventory bubble in China, but we certainly think there is some inventory cover, and it does feed into that story around why we are modelling for slightly lower import volumes from China in the back half of this year and certainly into 2022, which feeds into that story around some price correction that we're starting to see now.
Oh, that's fantastic, mate. Really appreciate your time, Michael, and we'll leave it at that for the moment. A great summary and a really insightful look at the current dairy market globally. So thanks very much, mate, and we'll chat soon.
Yeah, thanks for having me. It's such a dynamic market, so we'll keep a close eye on where things go to from here.